All right, good evening or good afternoon, good day, anywhere you are watching this video, at any time you get to see this video. Today I'll be solving the problem for our week 8 quiz access, question 7. Today we are required to close entry for a merchandising company. Let me just quickly share my screen. Let me go to the question proper. That's it. Okay, so quickly. All right. So we are required to prepare closing entries for a merchandiser, and the following list includes temporary accounts from December 31st adjusted trial balance of Emiko Company. Use these normal account balances to journalize closing entries. And so we are asked to use this information here to journalize a closing entry. And so the very first requirement we are asked to do is to record closing of credit balances in temporary accounts. I think that question is just a bit trickish to see what we understand. If you look at it here, the credit balance here for the account in the credit account is the sales account. And so they are asking us, this question is asking us to close the sales account. And so like we know already, the sales account is a revenue account. And we know that revenue increases in credits. And so to close it, the logic I use to know this is that when it's increased, if you are closing an account, you go to the opposite side, that's where it decreases, and use it to close this. And so since revenue increases in credits, then sales obviously will be closed in debit. And so we'll go sales for the sales, no, not sales discount, sales rather, sorry, that's typographical error. For sales, and so we are going to close it by debiting it. And so the amount there is $553,000, right? And so you close the entry by crediting income summary. And so income summary, we credit it with same amount, $553,000. And so the sales or revenue accounts, as it stands right now, is closed. And so the next requirement is record closing of debit balances in temporary accounts. So now debit balances, like we can see here, are the expenses. Now for service company, we go straight to the expense, but it is not so with merchandising companies. So for a merchandising company, the very first 3 accounts to be closed or in the expense are sales returns and allowances, sales discounts, and cost of goods sold. Now we don't see this in service company. And so right now, all of them are listed as accounts in the debit account. And so I'm going to list all of them out, but to close them, like we already know, expenses increase in debit. And so to close an expense account or the expense account, we will credit them. That way we have reduced them, they have decreased, and then we would debit income summary. We will use income summary to close it. But I would not know right now the amount of I'm going to affix for income summary until I total everything that has to do with the expenses. And so to do so, I will list all the debit accounts out. That's the income summary, and then I'll credit them. So the very first one there is sales returns and allowances. And so sales returns and allowances, I'll fix it in the credit side, is 18,700. And so the next one is sales discounts. Sales discounts. Sales discounts is 5,600, 5,600, 5,000, sorry, that was an error. 5,600, 5,600. All right, the next one is cost of goods sold. Cost of goods sold. Cost of goods sold is 224,000, 224,000, 224,000. Now, these are the accounts associated with the merchandising company. And so the other ones are accounts that can be found both in the merchandising company and in the service company accounts, right? And so I'll list all of them here. And the first one there is sales salaries expense. Sales salaries expense. Sales salaries expense is 54,000. 54,000. And the next one after sales salaries expense is utilities expense. Utilities expense or expenses is 18,000. 18,000. And the next one is selling expenses. Selling expenses. Selling expenses. No, not prepaid, sorry. It's a typographical error. The next one is selling expenses. Selling expenses is 39,000. So let me get that out first. Selling expenses. Selling expenses is 39,000. 39,000. And then the next one is administrative expenses. So administrative expenses is 111,000. 111,000. Now, I think these are all the expenses here. So I'll total them. Permit me to use Excel worksheet to total them. So the very first one we have there, let me just list them out, is 18,700. So we have 18,700. 18,700. Then the next one we have is 5,600. 5,600. 5,600. And then the next one we have is 224,000. 200, I think this is 5,600. Permit me, 5,600. Then the other one is 224,000. 224,000. And then the next one is 54,000. 54,000. 54,000. And then the next one is 18,000. 18,000. And then the next one is 39,000. 39,000. And then the next one is 111,000. So I would use the sum function to sum all of these and I'll get the total. So it goes to sum. No, sorry. Sum all of this together. Okay, so the total of all of this is 470,300. So that total now, I'm going to place it in the income summary. So that's what I'm using to close the whole of the expense account or the debit account. And so what we got is 470,300. 300. And so as it stands right now, the debit balances in the temporary accounts or the temporary accounts, they are closed. And so I'll move to the next one. The next one says that I should record closing of income summary accounts. All right, income summary account increases in the credit side. This is indirectly the net income, right? And so it increases in the credit side. Because it increases in the credit side, I'm going to debit it to reduce it like I earlier explained. But for me to be able to get this net income price or the figure that I'm going to fix in the income summary, I just have to subtract all the expenses like we know already from the sales or the revenue. And so when I subtract all of them, I'm going to get net income. And so let me go back. So from here, sales is 553,000, right? 553,000. Okay, so let me go back to the Excel worksheet and then I'll just do all of that. So all of these now are the expenses put together. And so I'll subtract all of this from 553,000 minus 470,300. And the total is 82,700. And so our income summary is 82,700. And then I'll close it by crediting retained earning, right? So retained earnings is same amount, 82,700. And so the income summary account is closed. And the next one that we are required to close is the dividend account. So like we know, the dividend account increases in dividend and expense, like we already know, it's an equity account that increases in the debit side. And so because it increases in the debit side, for me to be able to close it, I will have to credit it. But I will close it with the retained earning account. So I'll do that by debiting retained earning, right? Retained earnings account with the price of the dividend account. And that is 39,000, which is there, 39,000, right? And so I'll debit retained earning, then I'll credit dividends. That way, dividends will have reduced and it's closed and will be closed. And so I fix the same amount, 39,000. That is it. And so we'll just check for what we have done. I think that's all the requirements for this week. So we'll check for what we have done to see if sorry, I'm trying to move this. So let's check if we are correct, right? So I'll click. All right, answer is complete and correct. So we got everything. And so that's it for today. And that's it for the quiz aspects. And that's it for this question number 7. In case you have any question that you wish to ask for further clarification, please feel free to ask in the discussion board when this video is posted. Thanks and God bless you. Look forward to seeing you in our subsequent classes. Bye-bye.